What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at where the market's at right now. So we've recently gone up to our all-time high and we've retracted all the way down to 64K. And that was something that we talked about that we would be expecting in our last video where we did a market update. We said that when Bitcoin especially gets up to that all-time high, we often see a broader market correction. And so that's kind of what happened. We went down, the entire market went down about 20%. Entirely expected behavior. So, we've seen that in every single market cycle when Bitcoin has got up to that prior all-time high. So one of the things I was saying is, you don't want to get shaken out of the market if that happens. So what we're going to do in today's video then is take a look at where we're at now, what we might expect going forward, and what are the models telling us about this market? Because ultimately, our opinions, our thoughts about what might be happening, they don't really matter. What matters is what the data is telling us. The data doesn't have any emotions. It doesn't really care what's happening. It's not going to get emotional about where we're at. It's going to tell you in cold hard facts where it believes that we're at. And that's why we use data here, because it takes the emotion out of investing. The volatility in the crypto market exposes us to our emotions, right? We have these wild swings both to the upside and the downside, and the data keeps us grounded. So that's what we're going to do today. So we're on Polarity Digital. This is the site I run with Mark over at Upside Down Data. If you guys haven't seen his channel yet, I highly suggest you go over there and check him out. So we're using our forecast model here. This is a machine learning algorithm model, which is essentially looking at the market and saying, based on where we're at right now, based on all of the data that we have, based on everything that we know about this market, what is the probability that we will be at a higher price from here in 6 months? Okay. So you'll notice that this metric essentially starts to flash green even while we're in a downtrend still. So that's telling you that, we're in this downtrend, but I suspect that based on everything we know, the market is going to be positive in the next 6 months from where we're at right there. And so that's what we tend to see. So you'll notice that this model goes from 1 down to 0. So when the model's up at 1, that's essentially telling us that the model believes that there's a very high percent probability that we will be in a positive price direction within 6 months. When it's switching from green to yellow down to red, that suggested a high degree of suspicion that we will be heading for a market turnover within the next 6 months. Okay. And let me give you some perfect examples of that kind of playing out. You'll notice here that at the end of 2017, leading into 2018, the model had essentially been green, solid green up near 1 for basically the entire end of the bear market. It flipped green and it stayed green. But when it started to oscillate, was around here when we got to, the middle of June, right? And so the model was saying, well, I still believe it's going to be positive, but now I'm not so sure. And then it got really uncertain around September of 2017. Okay. And so remember, this is saying, is the market going to be positive in 6 months? It oscillated. And when you see that oscillation from green down to yellow, approaching red, so approaching that 0.3 level, that is indicating to us that the model believes that we may be reaching a top. It doesn't necessarily mean that the price will fall right after it starts to oscillate, because remember, it's saying 6 months ahead. So when it starts to oscillate, it's saying, hey, I suspect a market top is coming. And that's what we saw. Just about 6 months after this model started to oscillate right here, that's when the market turned over. Okay. And you can see that, we topped, and even ahead of time, even before the top, the model had already turned deep into the yellow heading towards red. And so we went through the bear market. It was basically telling you red almost through the entire bear market. Then it started to oscillate out here. You'll notice that it started oscillating right in October of 2018. We had this big market correction, and that's when it switched to green. And, if you look at this, it's, the model was basically saying right here at this very bottom point of the market that, hey, we believe that this market is about to make a turnover. Okay. And we saw the same thing as we started to reach a top here in the middle of 2019. It started to oscillate and headed down into the yellow and red. And that's when the market turned over and we led into the COVID capitulation event, right? So we had a downtrending market for about a year from 2019 all the way to the middle of 2020. And right at that point, right after the COVID capitulation event that occurred right around here, you'll notice that it started to oscillate again. It went back to the green, and that's when our bull market began. All right. In fact, just about 6 months later is when it really took off. I mean, you can see that this metric has done just a phenomenal job of pretty much front running where the market turnover is going to occur, right? So in 2021, the same kind of thing. It started to oscillate as we were reaching this market peak here at around 64K. And then it kind of oscillated right in here in the middle of the year. And sure enough, that's when we turned red and headed into the bear market. In this cycle, it turned over right around here, right around the middle to end of 2022, right? So the market wasn't done correcting yet, but this model was telling us that, hey, based on all the data we have, it looks like we are about to make a turnaround. So, I mean, this thing's just been spot on at identifying where the major market shifts are going to occur. And the important part about this metric is it front runs them. I think a lot of different metrics out there can kind of give you reactionary information. This metric truly has been a front runner of what the market is going to do. Okay. So what we see now is we've basically been trending to the upside all through 2023. And the model has kind of indicated to us that, yeah, this looks like a very strong market. Now you'll notice that we have these oscillations. Importantly, they're all fluctuating within the green. So, when we have a big correction, when there's a big shakeup in the market, yeah, the model may react to that slightly, right? Like it looks very volatile here, but you have to keep in mind, we're basically in the 80s and above pretty much the entire time. So when we have these spikes down, like we recently just had a spike down when the market corrected right there, when we saw this correction go from around 73K all the way down to, around 62K, we had a big spike down, but importantly, it stayed in the positive direction. The model is continuing to say that, yes, it looks like there is a lot of strength in this market, and therefore we believe that the market will continue in a positive direction going forward. Now, if this were to turn over, if we started seeing this model fall down into the, eights and then sevens, and then we're getting like an oscillation like we saw back here in 2021, something like this, it wouldn't necessarily mean that the market is over. It would just mean that we're running out of steam. We could still go to the upside. And remember, we're looking at Bitcoin here, right? But Bitcoin kind of drives the entire market, as we all know. It typically goes Bitcoin and then the altcoins and Ethereum, right? So there's going to be a cyclical nature of these markets. So for Bitcoin, though, at the end of the day, if it crashes, the whole market's coming down with it. Maybe not instantly, but within just a matter of time, it's coming down with it. This model was kind of oscillating like this back here. Doesn't mean the market has no upside left. It simply indicates that it looks like we're running out of steam, and it's very likely that we're going to be moving towards the downside. So if we were to start heading down into these lower levels, that would indicate that it's very likely that we're kind of short on time with the Bitcoin market, but we're not seeing that yet. So that's not necessarily at the forefront of our concerns. The next thing I want to quickly show you is a metric that I've been developing. And, I haven't released this yet, but it could potentially show up on Polarity Digital along with our other host of metrics. So I think this metric is sort of complementary to the host of metrics that we currently have on there. So what I view this metric as is a type of market acceleration metric. So whereas the forecast model is kind of telling you whether it believes that the market will be higher in 6 months, this metric is kind of telling you how much strength does it think the market is building up. So the way this works is we're basically looking for a trend and a follow through with that trend. And when you start to see that trend decline, it's essentially telling us that the market is not necessarily at the end of the road, but it's running out of steam. So this is I don't have a name for it yet, but I just think of it as like an acceleration metric. You can see that this metric has also done a pretty good job of identifying like where market turnarounds will happen, right? So, we've seen like here, the metric falls off a cliff right at the end of 2018. And then it kind of shows you these very delineated points at which the market is making a turnaround. Okay, so let's take a look at a bull market scenario here then. So this was the cycle back in 2020, right? We had just had our COVID capitulation event. You'll notice that we were in this red period here. And then the market started to make higher highs. So we were in the red, we got a bit higher, then we started to turn green. So when you do that, when you've oscillated from a bearish segment of the market into a more bullish segment of the market, you want to see follow through from that point. And that's indicating to you that the market is accelerating. There's increased momentum in the market, or the velocity is increasing, right? And that's exactly what we saw. So you'll notice that this metric went from red to green. It continued to build up steam in the middle of, the middle to end of 2020. It continued to build up steam all the way through October, November, and then into December. And then what happened? And I think this is the important part right here. Even though it was still positive, this metric was still flashing positive for us, it began to lose steam. So you'll notice that we had this bearish divergence, or this deceleration, that occurred right here in January. So that didn't indicate that the market was out of upside, but what it did indicate was that, the total returns you're going to see are vastly diminished from what they were before. So let's just take a look at what that means. We made a return of around 360% from the time where, this started to turn green, indicating bullish shift in momentum. From that point though, what happened, right? So we went from around 40K here all the way up to 64K. So the market only had around 57% left to go for Bitcoin. So importantly, it remained on the positive side, indicating continued bullish price movement, but it was decelerating. So we were losing steam in the market. Then it flipped red, but this is why I like this metric. It flipped red, right? But it started to show a bullish divergence. So the market was declining, right? The market was declining, but you importantly saw that it was building up strength. So even though we were red, it made a higher high, a higher high, a higher high, and then ultimately came and broke above, right? So then we got all the way up to here, October of 2022. Then we flipped to the downside. So that's not only a deceleration, we're in a market reversal. So the market itself, we went from kind of having these very short periods in the red, or the bearish side of the market, to having these long extended lower lows in the bearish direction. So when did we see a reversal start to take place? And that kind of happened right here. You'll notice that we started to get some more positive price action. We started to get more positive action. We started to flip our momentum. So even this peak that we made down here at 15K, it was still less of a downside move in terms of the market acceleration. And so we were seeing this very strong pivot where we're pivoting from deceleration to increasing acceleration, right? And then we turn green. Where was that? That was right at around 22K. Okay. And you'll notice what's been happening now. And this is why I want to focus on this, because, I think there's been a lot of worry in the market about, what's happening right now. Are we at the end of the market cycle? And just like, if we think back to what the market forecast model was telling us, so it was indicating that there's still plenty of positive price movement in Bitcoin. Likewise, what are we seeing in the acceleration model? Well, we've made a higher high in March of 2023, a higher high in July of 2023, November, December, again in February, and now here in March. So we've seen nothing but acceleration in this model. So not only does the forecast model tell us that it believes there's still positive price action ahead of us, the acceleration model is confirming that by saying, look, we're not running out of steam. So far, this is not a 2021 event where, we aren't seeing any follow through. Like, we've made a top and, we're coming down and we're making lower lows continually. What we're seeing is continual higher highs. Now, it doesn't mean it needs to happen right away, but what I would like to see from here is another bounce, even if we come down to the zero level. Even if we came down to that zero level, that would just indicate that, we're experiencing a market correction, and that's healthy and expected. But from there, what you want to see is another move. It doesn't need to be a higher high every time, but we don't want to see a continual trend where we're making lower highs. That would indicate to us that, the market is running out of steam. It doesn't mean that we're at the end of the road, but that point could be coming very soon. So as long as we see this turnaround with positive acceleration without significant areas of deceleration, in other words, making lower highs, lower highs, lower highs, trending towards zero, that suggests to me that this market still has a ways to go. In addition to that, I'll be watching the forecast model to see what that says, as well as the other metrics that we host on polaritydigital.io. So that's going to be it for this one, guys. Until next time, as usual, see ya.